Hi, everyone. Good morning, good afternoon. It's our usual strategy update. But what I'm going to do is, first of all, start with uh, some of the macro uh, news events this week. So, what we are looking at. So, one of the main aspects this week is basically how the GDP growth numbers are coming up. So, European Union and US numbers coming up tomorrow. So, um, we are interested in finding out. So if you basically look at it, the GDP growth quarter on quarter or year on year kind of numbers, it's basically a lagging indicator. It's not going to be an indication of what is coming up in the future, but it can tell us how the economy has been performing over the last quarter or in comparison quarter on quarter, etc. So this becomes a important aspect that we use as part of our money flows sort of determination. So on our system, what we do is first of all we look at the money flows, and then based on how we expect money flows to work, we then have our next level, which is to look at which asset classes are going to benefit from that. Um, you know, from that sort of money flow. So then we then look at which sectors at the same time, basically look at which sectors are going to be benefiting from something like this, and then how the economics thesis plays into those sectors, and whether there is an expectation that um, companies are likely to benefit or be impacted by certain macro changes that are taking place. So macro is just one side of the story. We have to look at a combination of things, right? There is industry level changes that are taking place as we speak. The structure of the workforce has changed. Why do I say that? Today's middle management layer is thin. It's not the same as what we had pre-pandemic. So there has been a significant change in the mid management layer. Um, we also see a number of changes that are taking place in how consumers buy products. It's not just a case of like I can go online and buy it. Like that's not the only change that we are looking at. The sentiments are changing, way they are influenced is changing, what they look for is changing. So this is exactly where our core thesis of aspirations gap fits in. You aspire for something, but you don't get that in reality. And that aspiration gap leads to two things. One is where you find that a certain product or service, housing, transportation, whatever it is, will give you your aspired outcome. You're probably okay to spend a bit more to attain that aspiration. Example, um, young people aspire for a digitally interconnected, sustainable future for themselves. So, what we find is people under the age of 30, whenever they are getting the first opportunity to sign up to a utility contract, they are picking one of the 100% renewable energy providers. What does it tell us? It tells us three things here. One is if you are a renewable energy provider, you must target younger generations way more than playing around with this cost arbitrage kind of a game with the older generation, because they are more of a captive audience, which you don't realize today, right? That is number one. That's the evidence on the ground versus your own thesis that you've got. Uh, Secondly, what we also see is uh, because there are more and more sign-ups, I can say there is an increase in customer numbers for these companies, but it doesn't stop there. Uh, Even if they will switch to another 100% renewable energy supplier, and it is not going to be just a price comparison exercise for them to make that decision. Are you aware of that? Are you playing only with price? Are you only playing the game with price comparison websites, or are you playing it right by promoting your sustainable credentials? That is the question to ask. The third factor to look at: how long do they stay in that particular contract? So, as an example, here in the UK, a lot of people don't switch utility contracts that often, right? So, it might be that somebody signs up to a utility provider, stays with them as long as they live in that particular property. In some cases, they might switch maybe once in 5 years or 6 years, whatever is that time frame. It is significantly longer in the utility space. But just compare that to various other markets. Like, take for instance, if I was buying, um, basically our weekly shopping, I would like to go, to a supermarket, and I would like to do my, weekly shopping over there. So how is my, um, what is my sort of criteria to kind of decide on what I want to buy? What we find is younger people choose one, stay with it for long. It is not, we've heard this argument a lot of times that the younger generation, they're very fickle and they're just going to change their mind just like that. That is not the reality, right? That is your thought process. That is not what the data is telling us. It's again a case of confirmation bias that a lot of us have, right? We don't invest on the basis of now, like looking at the younger generations and looking at that, because we think a younger generation are very fickle minded. They're not going to make those decisions. They're not going to stick with it. They're just going to change. That is your thought process. That's not what the data is telling us. What the data is telling us is they are sticking with their decision for longer, and they are growing through uh, you know, uh, basically with these brands and these choices over time. That is what the data is telling us. So this is one fundamental problem that we have with all of investing today, right? We think we have a certain worldview, we have a certain hypothesis, and we look for data to confirm that. So we like confirmation bias, and a lot of investing is based on confirmation bias. Whereas what we do here at Helix and the way we run our fund is not based on confirmation bias. We look for evidence on the ground. We look for market data. We look for various surveys, etc., data that is available to us, and on that basis we make investment decisions. And that is the fundamental difference why our fund performs significantly better than any other investment vehicle that you've ever seen, right? The gap is excessive. The confirmation bias in the financial markets is excessive. Every uh, every decision that you make in the financial markets is based on your own confirmation bias. If you can avoid that and uh, basically look for evidence, which is exactly what our these days we have to put AI in everything, right? So, this is not really the AI type, what do you call it, a large language model. We don't use any of that. We use a graph neural network at the back to understand the causality between the causal relationship between these, money flows, the sectoral changes, the the stock level changes that are taking place, and also the understanding of how specific companies are working on these initiatives, right? So that gives us a big edge. Is it for everyone? Is this going to be suitable for anyone? Rudit? No, it is for you as an individual if you're looking at the longer term, and if you're looking at investing for your children or for your grandchildren. Yes, if you're a family office and you have a track record of investing in ESG, yeah, this is for you. If you're an institution and you have a track record of investing in ESG, then this is for you. It is not for you to gain, uh, market returns tomorrow morning. It is not for you to manage your immediate financial needs or to come out of financial distress tomorrow morning. That's not going to happen with ecoeconomics. That's not going to happen with the Helix fund itself. Right? Let me be very, very clear about that because this is very, very important. Right? Again, we are only targeting high net worth individuals, sophisticated investors, family offices, institutions. We are not available through an ISA, so it's not going to be possible for you to get onto this. Yes, there is a minimum capital required for you to invest uh, into our fund. Uh, there are basically, as I said, we are a sustainable investing platform. There are two sides to our work. One side is we run a fund that invests into public securities. On the other side, we deal with you know private securities, private companies raising money, and why we can connect with the right private investors who can invest into these companies. So, uh, two ways you can work with us. One is if you're looking to invest in the fund, you get in touch with me, and I can put you on to the information that you need. Secondly, if you're raising capital as a company, then come to us. We can help you with this. Thirdly, if you're a family office or an institution that is looking to modernize your portfolio, looking to diversify into the ecoeconomics thesis, let me know. We can help you with our outsourced chief investment officer services. Now, I want to take a bit of time to talk about one specific stock. Right? I generally don't do this in my strategy reviews, but this time I'm going to do this. We're going to talk about Walmart, right? A large retail offering, right? It's kind of a rare blend of scale and resilience, and also long-term moat, right? So, as I said in the previous sections as well, we look for a very good economic moat, right? We are not interested in the fickle business models at all. Uh, Walmart, largest retailer by revenue, largest grocery retailer in the US. So I'm not going to go into specific numbers because you can obviously look at it from the news and whatever. Right now, some of the things that Walmart is doing, right? There is a lot of automation there. There is AI-powered inventory systems that they've talked about in their earnings release. There is a big e-commerce infrastructure. There is also a pretty good investment business that they run. Phone Pay in India is a fantastic example. And they invested in fintech in India. So I'll talk about some of the um, ones that we're looking at, right? So consistent financial performance, uh, operating income, modest but healthy growth. Right? That's very, very important, right? You're not looking for big jumps or whatever. Consistent growth over time is more important than this big jumps that you get 1 point at time and whatever, right? Um, we look at The free cash flow, we look at the ROIC of the companies as key parameters that we tend to underscore for any investments that we make, right? So it did have, a negative working capital. Um, while it can signal a potential liquidity issue, but that's not the case for Walmart. It's a carefully managed aspect of the business model, right? Uh, there is a trend of negative working capital. However, there is a deliberate strategy that is being employed by the company here, right? Uh, by bringing in, pretty solid, scalable negotiating power, um, payment terms to suppliers, etc. Uh, there is an increase in current liabilities while simultaneously turning over inventory more rapidly, which is which is what um, now, in kind of layman language I can say selling the goods before the supplier payment has to be made, right? It allows Walmart to utilize the supplier credit as an internal source of funding, right? If you're a supplier to Walmart, yeah, it can hurt you a bit unless you have a very long term relationship with them and you understand this mechanism, which of course is the case for most of the suppliers. Uh, this mechanism underscores the capital efficiency of um, uh, Walmart, right? So uh, they did have a dip in free cash flow, and it was highlighted um, in the earnings call, primarily because there's an increase in operating expenses and investment in capital expenditure. Right. Um, some of the long-term investments they've made, modernizing their stores, uh, digital expansion, logistics, to kind of reinforce their market position. Um, CapEx is part of the strategic growth here, viewing free cash flow as a supplemental performance measure. Right? Um, it's kind of deliberate dip, not a unexpected one. So our strategic analysis here continues to grow, strong performance. Um, Sam's Club saw uptick in its membership numbers, but at the same time, the average users have also user revenue has also increased, right? Um, so they've taken a larger percentage in Flipkart in India, right? So basically, kind of solidifying their operations in India. Um, at the same time, there is this Massmart, another subsidiary, right? They've got 100% ownership of that. Um, what they did with PhonePe is also quite interesting. New round of equity financing, which means that reducing their ownership price slightly, but again, PhonePe is very crucial in the sort of fintech market. Then um, they've got investments in JD.com, China. But what they've done is they've slowly kind of exited underperforming markets. Japan, UK, Brazil. I live in the UK, right? Brazil, Argentina, um, and it's basically divested its stake in JD in China. So um, what we see is also that uh, it's also set up additional segments like advertising, Walmart Connect as an initiative, a third-party marketplace listing, and fulfillment services. So it's like another alternative to Amazon from basically from that perspective. The ESG, if you basically look at it, About 29% of its global energy needs come from renewables. Uh, there is there's basically numbers that show us that they're progressing towards a halfway mark, right? But what we did was um, we didn't take the absolute numbers, but we kind of continued to look at how much of the global operations is powered by renewables. Uh, we are not very interested in scope one, scope two, scope three emissions. What we look at is how much of that is changing year on year, and is that in conjunction with various strategic initiatives that they're taking, right? Um, so what we also find is from a waste management perspective, nearly three-quarters of their waste is diverted away from landfills globally. So major change over there. Uh, they've improved the fuel efficiency of US fleet, uh, directly kind of benefiting energy efficiency, right? Fuel efficiency. Sorry. So they did miss ESG targets. We are not that bothered about ESG targets. What we are really interested in is the real changes that are taking place. So are they going after business expansion? Yes. Are they changing outdated systems? Yes. Are they uh, managing their emissions very effectively? Yes. Uh, are they managing their waste very effectively? Yes. Can it be better? Yes. But are they making the right kind of moves? I think they are getting there, right? Which is very very important. So major challenges still remain, and the tariff related challenge, which is pretty much the big one, big elephant uh, in the room, uh, right? So and there's also as they expand their sort of digital and e-commerce operations, there is a increase in cyber-related risk, right? Some amount of inventory mismanagement I can see, right? That risk is definitely there, but it can be a little bit better. Um, our views is, we kind of look at um, uh, at about um, kind of long range forecast about a year. We are basically looking at this being a buy or a hold sort of a stock that we're doing. We are looking at entering this particular stock at the right price. For a detailed research report, um, it will be shared to our subscribers. The analyst working on this is Abdul, and I will share his LinkedIn profile as well as part of the detailed um, research report. You can contact Abdul directly, connect with him, make recommendations. If you would like to share any further information directly to Abdul, that would be fantastic. But at the same time, if you're looking to uh, invest in Walmart, please share your views to subscribers. Fantastic. So that's it for today. We are looking at these major macroeconomic flows. I talked about the confirmation bias and the fact that our performance is largely driven by the fact that we are avoiding confirmation bias. And how do we do that? We use this AI system. We're calling it AI system, really a causal network using graph neural network technology. It's not large language model. We don't use generative AI, etc. Our definition of AI is quite different, and it works in the market automating processes. We are looking at the realistic views and evidences uh, that are available in the market. Right. Thank you. Thanks for listening in. Please share your thoughts. Please share it with your contacts. And if you have any questions, please get in touch with me directly. Thank you.